So this video is looking at the week commencing the 15th of March, with the focus being on UK equities and the path that I see taking place over the next couple of months as we come out of the pandemics, and how the charts really support that. So the chart in front of you is the FTSE 100, and I've just got up here when the corona crash happened, and then some resistance support levels that I've identified over the course of the last year or so. So just scrolling to the right here, we can see that there's been an ascending triangle or an ascending channel that's formed. It's not quite yet a triangle, and what we can see is there's touch points here which kind of show a channel that we're operating within. Interestingly though, we have this megaphone pattern that's forming within that channel, and this was something that was highly noticed in the S&P 500. So there's this kind of large megaphone pattern, and then the American indices basically then had this explosion of activity, and the buy momentum really took hold. And this is, in July last year, America saw that it was getting above these previous highs, where the UK is really lagged behind on that front. And what we can kind of see that's happening now is we've got this strong level of support that's formed. So you can see there's a touch point here where it initially started, so we call this an anchor point. And then you've got these touch points, and you can see it's been fairly strong and adherent to those points. Likewise, we've got this resistance overhead where again every time we've touched it, it's bounced off. And then looking horizontally, we've got these support resistance lines. So you see down the bottom here, we've got previous resistance, which has now turned into support, and you can see here we bounced off. And then likewise ahead, you can see we've got previous points of support / resistance. So here we broke down below resistance here, and then you can see we're just about to approach that level again now. So looking forwards, we've got some confluence that appears here. So we have a previous point. If we looked back here, there was significant levels of support that took place. Once support is broken, it becomes resistance. So this is really strong support here, and it's the top of this channel. And what this suggests is that there'll be a slowdown in the price action when we reach this region. So I'd expect some sideways consolidation, a pullback down to this level of support, and then we'd look to have that price shoot higher as we come out of these lockdowns. One thing I always like to look at on these charts is how it lines up with the Fibonacci retracement. I won't go into detail what the Fibonacci retracement is. The one thing you need to know is that the 0.618 level is heavily watched and traded by the pros. So if we look where that actually sits, we can see that 0.618 level is roughly where the price action is currently, which really favours that now we're above that area. We'd look to bounce off it on that next leg up, and that's really what I'm looking for, is this kind of move up, consolidation, pullback, and then really look for this explosion higher. So if we just have a look at what sort of gains we can expect on the FTSE. So I've just highlighted to the right here that come July, when we're out of the lockdowns, we'd be back to that previous high level, which at the minute is about 15% from where we currently are. So in order to exploit this gain, we can look at ETFs. So ETFs usually are highly correlated to the FTSE or the indices that they're trying to follow, and they tend to have a beta of 1. So if the FTSE moves up 15%, the ETF moves up 50%. What we want to look for is some stocks that are currently undervalued and that currently have more to gain from these lockdowns coming to an end, and try and look for something that really has the potential to move into the 30-40% gain over the next coming 2 months. And one thing that I do is I track on a monthly basis about 2,000 companies that are listed on the AIM market and the FTSE, and then I basically download all the financials, and there's a load of tests that I do on the right here based upon income, growth, value, financial health, and then I have this overall rating which is tailored towards whether I'm looking more towards value, more towards growth, more towards income. And the way I've got it set up at the minute, you can see I've got this company here, an EXO, which is one of the most highly rated companies that came out of this scan that I do. I've got Advanced Medical, and I've got Investec, which I've highlighted green on a summary here. So there's 4 stocks here I want to look at: Money Supermarket, Nexo, Advanced Medical, and Investec. In terms of the financials on these companies, we can see the returns they make. So net profit margin really high, which is what we're aiming for. So they've got a good cushion. They're also undervalued, so if we look on the right here, one of the easiest things to look at is the market to book value. Money Supermarket's fairly high, but if you look in the past, it's been much higher than that. And then if we look down the bottom here, we've got the banks, so Investec. The bank sector's never really recovered from 2008, so these are significantly undervalued to their accounting book value, i.e. if they were to break down the company and sell its constituents, it would basically be worth a lot more than what it's been traded at on the market currently. So let's have a look at Money Supermarket then. So if I go on to here, and if I go on to Money Supermarket, and we can just have a quick look at that chart. So if we zoom out on this, we can see we had this large bull run that started in 2010, pretty much finished in 2015, and we had this large period of sideways consolidation. The first thing I want to point out on here is that we've got this zone of resistance or zone of support, I should say. It was resistance, and you can see we broke above it, we back tested it, and we shot up. See here in 2016 we came back down, touched that zone, shot up, same reaction here, and then similar, the Corona crash, it finished around that level. You see we had a few dips below it, but it never actually broke that level. These candles, if the wicks go below, that's fine. As long as the day doesn't close below it, then it's not technically broken below that level. And more recently, we can see here back in November, we came back down to that zone and we've started to move off it. So the first thing I want to look at on here is the last time we came down, how much did we move from that zone? So if we just have a quick look on that last move, just to kind of get an indicator. So we came down here, and you can see we hit it and we bounced up to this level, which was a 53% gain. So that would have been a fantastic trade if you caught it at that point. But I mean, pretty much like everything in March, if you would have caught it, you would have made a gain come the summer months. So the price action now has formed a channel. So you can see we've got this strong upward channel that's formed, and we've got these touch points all across the bottom here. So I'm confident in this support zone. If we look back here, I've got this level of support that's now in place. So we can see here it gapped below, came above, back tested, shot above, back tested, broke below, and then you see here we had this large resistance. We had this kind of coiling up action. We then exploded above it, came up to this upper channel, and now we've just come back down to test it again. And there's again, confluence is one of the key things here. What have we got going in our favour for risk versus reward? So we've got this rising channel, and we've got this lower trend line which has been adhered to strongly. We've got this high level of previous resistance which is now strong support. So basically a buy around this 275 to 280 level, I'd be fairly confident that this shouldn't be a level that gets broken, and that's what the chart's basically telling me. So looking where this price action could go, assuming that here we have got strong support and we do see a bounce, we've got overhead resistance here. I mean, we can clearly see where it's bounced off previous to support, broke below, and then it's acted as clear resistance. And we can see more recently here. So we've got a level there from 280 to 310, which is 10%. But really what I'm targeting is this level at the top here. So this zone here, we can see there's a lot of price action that's gone on in this zone. There's a high level of resistance there that's in play. And going back to my idea around Fibonacci retracement, and it's just one of those things where it's a heavily traded level around this 0.168. If I plot this, we can see right in the middle of that zone 0.618. So that is really telling me that come the summer months, come June, July, when everything is lifted and we start seeing travel happening again, and we see the need for insurance and the use of Money Supermarket return, that market that's been artificially contracted and subdued begin to come out of that state. I really think that we're going to see this come up to this 350 level, and then we'll see a retracement. So in terms of a trade over the next 2 months, I'd buy at 280, I'd look to sell at 350, and I'd look at that 27% gain. Moving on to the next one, an EXO. So an EXO effectively provide cover cars, so cover vehicles for people that have been in accidents. So the insurance company would go to an EXO, they'd supply the vehicle, and that's how they basically make their revenue. Similar to Money Supermarket, obviously the travel industry's falling off a cliff, and also there's less people on the road, so again that insurance has really taken a hit over the last year or so. So there's less people having accidents, there's less need for an EXO's product, and that's where we've kind of seen this drop and limited recovery, and this is where we're sort of consolidating within this wedge. So what's interesting with an EXO is, again, we've got this rising wedge where we've got this clear touch point. We have clear overhead resistance that we've touched once, twice, 3 times, gapped above it, broke down below, and then we can see here it's been adhered to once again. So this is what's called a fake out. So we had a gap above, it was a false breakout, we've gone back below, consolidated further, and now you can see we're still trying to break above that. What is interesting on this is if I zoom in, I can see that there's clear volume consolidation here, or accumulation, sorry. So what I can see is that there's underlying buy-in with limited movement in price. So this is telling me there's a lot of people, there's a lot of money flowing into this company, a lot of stocks being bought, but the price isn't reflecting that. Further to this, if I look at the RSI down below here, we can see that we're gaining strength with this move. So the lower lows are being put in, and I can see that we have entered this oversold territory a few times and bounced back below, but we are gaining strength with this move. So looking for a breakout, if a breakout does occur, I've got 160 ahead, which we can see there's clear resistance, and then I've got 170, again further resistance. So if we have a look at what this move could yield if we got in around this 130 level is where I'd be sort of aiming. So if we got in around here, and if we got up to 170, there's a 30% gain there to be had. Again, always interesting to have a look at the fib retracement. So if we just look at the start of this move, and if we have a look at the retracement, I can see that kind of sits in between there. So it's looking like we could get a breakout, and then we could get a pullback, and then further acceleration. Again, this is over that 2-month time frame. Right, Investec. So Investec's interesting. It's similar to all the other banks. We kind of had this low level of consolidation around this base. We have got a base that's formed. We can see there's a clear double bottom here. Since then, the prices, again, it's had this upward trend behind it. What's interesting is we had this level of resistance ahead. We had a fake out, similar to an EXO, fake out, drop below, and now we're seeing acceleration come after that. One thing I would have liked to see was more volume on the breakout. So low volume means it's not particularly a strong breakout. So what I'm looking on this is a pullback to this confluence. So where this channel meets this now support line, I want to basically buy in at this level at 210, and then I want to look for an increase up to this previous resistance level. And again, that's a 35% move. So low volume, which suggests this move's not particularly strong. Look for the pullback, buy in on the pullback, and then ride it in for those next couple of months. The final stock that I'm looking at is a surgical wound provider. So they basically provide the dressings around that wound that needs treating. And obviously with COVID taking a focus on resources and funding from the NHS, the number of surgical procedures that's taken place isn't as many as you would normally see, and as a result we can see there's been this strong downtrend that's occurred in AMS. And interesting with this, we've had a negative divergence, so that tells me that the MACD, which is measuring your 12 period moving average against your 26 period moving average, we can see that there's a clear gain in strength taking place as price weakens, which indicates that there's a price increase on its way, and we should look for the next bull phase of this. So what's interesting on this chart, we've got these zones of support that you can see we've hit that was previous support and resistance, and then we've got this most recent one that we're currently sitting at now. And if I zoom in on this, it looks like an inverse head and shoulders patterns forming. So I've got the left shoulder here, I've got the head, and then I've got the right shoulder. So what I really want to see is a break above this level that's confirmed. So here you can see we broke back above and we formed then the right shoulder. If I can see that break above, then that would really confirm to me that there's further price action in play here. I'm looking at buying around this level at 220, and then if that does take place, I'd be looking at selling around this zone. And just to again have a look at the Fibonacci and see where that lines up, just to see where we are. Again, I can see the 0.618 confirms that zone of resistance is a clear target. So again, we're at the very start of these moves, and this is where we want to capture it. We've notified that there's a change in the trend, there's a clear downtrend, and we've actually broken out of that, and we're starting to put in higher lows, and it looks like we're doing it on increasing strength, and there's a strong probability that this is going to accelerate up to that level of 40%. So in summary, UK PLC is looking like it wants to rally over the next couple of months. There is resistance ahead. However, with everything that's going on and the amount of consolidation we've seen in the UK, I would expect to see the UK FTSE go up to around this previous high, and then secondly, these stocks I've identified I'd expect to accelerate or expect to pick up more momentum than the FTSE as a whole. So in summary, we've got Money Supermarket where we're looking for a 26% gain. We've got Annexo where we're looking for a 30% gain. Investec where we're looking for that pullback and a 35% gain. And then we have AMS where we're potentially looking at a 40% gain.